they pump it up to, let's say, 2 trillion, like you said, right? That's a lot. That's what, 20-30%
Yeah.
of the external debt.
Yeah.
They'll solve all the problems.
Yeah.
So they do that, and that what happens then? That's the bottom. That's the bottom gold price in US dollars.
Yeah.
Because they'll defend that. And they don't even need to defend it because it will be pandemonium. It will be
Yeah.
crazy. Me and you will be the most popular people on YouTube. Okay? Probably. Two boring guys, right? Like, so everybody will be in gold and silver at that point. And then, like, after the revaluation, they'll probably take it up to 10,000.
Monaco 64, home of alternative economics and contrarian views. Today, I have the pleasure of speaking with Eric Yeung, aka King Kong 9888 on X, if you want to find him. He's doing some great work about the precious metals market. Welcome again, Eric.
Thank you, Mario, for having me on your show again.
Oh, you're more than welcome. Thank you for being here as well. And I just wanted to let the viewers know that we're speaking on Friday, March 21st. So, with no further ado, Eric, and you're talking about the U.S. government and the fact that all this gold is flowing to the U.S. that they will probably be revaluing their gold, the U.S. Treasury. So can with that, could we move into what you covered recently, the U.S. Treasury gold certificates, and that their face value is in U.S. dollars, I think, not in ounces of gold, right?
Correct. So a lot of people, they don't really understand that US Treasury gold certificate concept. It's actually a ownership firewall. That's what I call it. It's actually, if you look at it from their perspective, it's ingenious. They have devised this firewall that will allow the US government or the US Treasury to maintain its sole ownership unencumbered, encumbered and unencumbered and completely 100% totally owned by the U.S. government. I'm talking about the 8,133 metric tons of gold. So how do they do that? So let's go back to 1973 when they did. This is the last time when they did revaluation, and when they asked the Federal Reserve to take the to take the U.S. Treasury gold certificates. So this is 1973. So starting in 1973, the premise is that the U.S. owns the 8,133 metric tons of physical gold via the U.S. Treasury, unencumbered and free and clear. That means nobody has any claims on it. This is where they started off with, 1973. That's the premise. So they issued 11 billion US dollars worth of US Treasury gold certificates to the Federal Reserve. And why is that? Because that's how much that, like, the 8,133 metric tons of physical gold was worth at $42.22 per troy ounce. So that was the face value of the gold certificates that they issued to the Federal Reserve. Now, the Federal Reserve, upon receiving that gold certificate, created $11 billion out of thin air and gave that money to the U.S. Treasury at the U.S. Treasury General Account, which is the TGA. That's the acronym, TGA. But the Federal Reserve did not have any claims on the 8,133 metric tons of physical gold that the U.S. Treasury held. So you see how that worked, Mario? That's basically, the gold certificate is just a testament of the mark-to-market value of the physical gold that the US Treasury held in 1973. And all the Federal Reserve had claimed to was the fiat USD amount of $11 billion, which is the face value of the US Treasury gold bonds. Does it
Good.
make sense at this point?
Yeah,
Like, I
yeah,
mean, I can
yeah,
answer any
it
questions
does.
here.
It does
Yeah,
make sense. So, because you
yeah.
look at the Fed's balance sheet, they don't say that they have certificates worth one 8,133 metric tons. They just give the 11 billion fiat amount, fiat dollar amount. But one thing that's interesting, Eric, from this certificate here is that it says $10,000 in gold payable to the bearer on demand as authorized by law. So maybe, yeah, maybe this is a note certificate where they actually paid the gold. But because it looks here that from what you said, the Fed will not be able to get the gold. So why do you think that is important? Does that mean that like they'll never have to like give up any of the gold, right? And if they
Well,
want,
think about it, Mario.
yeah,
That's why the US Treasury is still keeping their physical gold, the 8,133 metric tons, at $42.22.
yeah, that's right.
That's the reason. See, if the gold is revalued before like the next step, which I'm going to describe, right?
Yeah,
Then the Federal Reserve will have claim to the new value of gold, okay,
yeah,
at that price, right? Like they can't do that. So the next step, like we fast forward 52 years to today, right? Let's say the US Treasury want to revalue the physical gold, the 8,133 metric tons, and capitalize on it by you doing the same trick with the Federal Reserve, right? They
yeah,
have that magic money tree spit out money. So what did they do? First, what they do, and this is all in one step, by the way, all in one step. Before they even revalue the the physical gold, okay, they would first pay the Federal Reserve the $11 billion. So that's the first step. They would pay that off, right, with the old $42.22 per troy ounce. So that's settled. Does that make sense?
yeah. No, it does. And then,
Pay that first, right? And then revalue it
yeah,
back
that's
to
right.
market
Then reval.
at like $3,500, right? And then they revalue to $3,500. Then they issue. So this is a good point, Mario, because I didn't even explain this part. I explained a lot of it, but not this particular part in my video. Now I'm explaining it in your video. Okay, so this is important. So the first step is they would not revalue first. They would first pay off the 1973 gold certificate at $11 billion at $42.22 troy ounce, US dollars per troy ounce of gold. Okay, so they pay that off. Second step, they revalue mark to market to whatever. Right? Let's use the example of 3,500 US dollars per troy ounce. Second step, they revalue. Third step, they issue a new US Treasury gold certificate valued at $1 trillion to the Fed, and then the Fed would create out of thin air $1 trillion, and then they would deposit that $1 trillion into the U.S. Treasury general account. But all that, like all of what I just said just now, like the 2025 hypothetical situation, that all happens in one step. Okay, one step at the Federal Reserve and the US Treasury. So they would just simply pay the US Treasury the difference, which is 1 trillion US dollars minus 11 billion in one step.
Yeah. So it looks like a good analogy, and I think you spoke about that. Let's say the U.S. Treasury is you or me, and the gold is our house. So
Yes.
we mortgaged it in 1973
Yes.
for 11 billion, and the Fed gave us the cash. And now though we're broke, so we need to mortgage it again, but at a higher price because the house has gone up in value. So we did the same thing again. That's not a very good sign, is it? It's saying something is not well with the U.S. Treasury.
Was an accounting trick, right? But
Yeah.
they are basically like this is. I know you interviewed Judy Shelton. This is basically just like what Judy Shelton said in her book and in her many interviews. Is unleashing. This is unleashing the power of the 8,133 metric tons of physical gold that the U.S. Treasury has. So they're leveraging on it, right? And then on top of that, Mario, I wrote something on my X today. I said they are probably double dipping the magic money tree. Why do I say that? Because on top of the $11 billion that they got out of this US Treasury gold certificate deal with the Federal Reserve, the US Treasury probably lent out a lot, I wouldn't even say some, a lot of its gold to the Fed over the years. So this is a separate hidden deal altogether. Why do I say that? Our mutual acquaintance, Ronan Manny, has done a lot of research and he documented evidence of US Treasury physical gold being removed from deep storage to possible leasing outside of the US. So how would that work? Well, my thesis is that the U.S. Treasury probably, like I said, lend out some of that physical, let's say like 3,000 metric tons, to the Federal Reserve for a small or so, I don't know how big, right? Some lease fee, whatever the lease fee is. So they get kind of like a rental income for the physical gold. And then the Federal Reserve probably um, let their member banks, who are also bullion banks, by the way, like JP Morgan, for example, they the Federal Reserve let these member banks take that physical gold for again a lease fee, whatever that rate is, to lease out to other people. So that's where I wouldn't call it hypothecation, Mario, because you're leasing it at this point, but whoever the end party is, if the end party also is claiming ownership of the gold, that's rehypothecation. But this is through middlemen, right? The Fed and the US bullion banks, they're middlemen. They are not the US Treasury. So the US Treasury did not directly sell the gold to a third party or fourth party. They probably went through the Federal Reserve and there is member bullion banks. And that's why, that would explain why there's this huge rush of physical gold into the US in the last 3 months.
Yeah, I guess in Judy Shelton's book, she didn't mention an audit, but I think a lot of people, after they read it, started saying, "Aren't you going to do an audit?" And she said, "Yes, an audit would be good." And I think they know now, the Treasury and the U.S. government, that in order to make this work, people have to believe in it. Is that why? Because they could have just let things as they are and not, still claim to have 8,133 unencumbered. But I think the cat is out of the bag, so to speak. So they need to do an audit. So they need to like recall all the gold because some of that physical gold might not even be there in the depositories at Fort Knox and other places.
Yeah, I think that's what's happening. like I said, I think it was leased out over the years, and they're trying to get it back right now. That's it.
Yeah, that's
So
right.
that's a separate deal. Separate deal. Okay, we got to remember that from the gold certificate deal. The gold
Yeah,
certificate deal is one deal, and that was done in 1973, and they might do it again, right?
yeah,
But that's not the leasing deal. The leasing deal is something
of,
completely different
of
that is
course.
hidden that we haven't seen yet.
But
So,
it would affect it could affect the revaluation because it would if the gold isn't there, what's the point of doing the revaluation? But I agree with you that it's separate. Did you see that Senator Loomis of Wyoming, she reintroduced the Bitcoin uh, reserve asset bill, strategic
yep.
reserve, and in that bill, on the next to last page, they spoke about this revaluation of gold. Which would be done along with this bill, which is very interesting, I would say. The question is whether this bill will actually get voted through. It's only being introduced. Have you got any opinion on that?
Well, the bill, I have it in front of me. Let me read it to your viewers right now. Okay?
Yeah,
That part that proves my point. Exactly, the mechanics that I just described is correct. Okay? I'm gonna read this. So upon issue by the secretary, each Federal Reserve Bank that receives a new gold certificate shall remit the difference in cash value between the old and new gold certificates to the secretary for deposit in the general fund within 90 days. So think like that's why people say, oh, this Bitcoin bill may not go through. Loomis is out there just dreaming, right? It might not happen. But I tell these people, I said, and some of these are my good friends, right? I tell them this is so important because it describes exactly the mechanics of how the gold certificates work. It tells you right here, right, that they are going to sell. They're going to basically remit the difference in cash value between the old and the new gold certificates. That's the key, right? Because before this, people lined up to argue with me, saying that um, they don't the U.S. Treasury don't need to pay the old certificate. If that's the case, the wording won't be like this, right? The wording won't say that the remittance will be right that they are going to sell. They're going to basically remit the difference in cash value between the old and the new gold certificates. That's the key, right? Because before this, people lined up to argue with me, saying that they don't the U.S. Treasury don't need to pay the old certificate. If that's the case, the wording won't be like this, right? The wording won't say that the remittance will be a difference in cash. Okay? And think of just one word, cash value. That's important. It doesn't say gold. Nowhere does it say physical gold. It's cash value because, like we said, the gold certificate, all is specified is the face value, cash value of the gold certificate upon issuance. That's it. So in just three sentences, it validates everything I said, basically.
sorry, Eric. Yeah, no, I agree, and I just thought of something, Eric, because
Yes.
you probably heard of John Exter's inverted pyramid.
Yes.
So here we are. This is a modern version because I don't think he added derivatives to his. But so if this whole system up here is under threat and is almost collapsing, if you revalue gold, this base will become a lot bigger and it will be more easy, more, it'll be easier to sustain all the credit, isn't it? Is that why you think they're doing it? They or
I
they
think
they will do
I
it?
think I think definitely that comes into play, and also the fact that if they are going to do the U.S. Treasury gold certificates, they have to revalue the physical gold. There's no other way. You can't issue U.S. Treasury gold certificates if your the value of your gold of the gold on your balance sheet is $42.22. I mean, I
Yeah.
mean, then how much, how much gold certificates, gold bonds can you issue, right? If you're the U.S. Treasury and you're valuing your gold as at $42.22. So I think not the cash component from the Fed is only half of it, or maybe even less than half. The U.S. Treasury gold bond, I think, is going to be a huge component of this revaluation.
So you think because in Judy Shelton's book she talks
Yes,
about it as these treasury trust bonds, as she calls it, as helping stabilize the value of the dollar. It doesn't seem to me that they would be issuing that much of it, but you seem to think it's different. They're gonna be more prone to issuing more of these gold-backed bonds, you think?
I think if they go with what Jim Bianco said, which is zero coupon, and Judy also said that, right? Like if they issue these gold bonds, it will be zero coupon. But Jim said that Donald Trump is thinking of issuing zero coupon bonds, century bonds, to his allies, and forcing allies to buy it or convert what they have right now in US treasuries to these zero coupon bonds. I think they have to have the gold component to it. Otherwise, I just don't see how the allies can swallow that poison pill. It's just not going to happen because zero coupon is one thing, but if you buy these century bonds from the US government and your underlying is fiat USD, in 50 years, you're going to lose everything. But if it's gold bonds, and somehow the gold bonds have, it's not these bogus gold certificates. It actually has the weight and purity of the gold on it when you buy the gold bonds. That makes sense, right? Because like if you buy it, let's say 2026, you buy I don't know, like $100 billion worth of this U.S. Treasury gold bonds, and that's let's say equivalent to 100 metric tons. I don't know the exact number. I'm just using it as a placeholder, right? 100 metric tons of physical gold. You get that back in 50 years. You get the gold back, right? So
Yeah,
you won't lose the depreciation of the US
no,
dollars.
no, you
That's the
don't.
whole point of Judy Shelton's premise,
Yeah,
right?
yeah.
As I understand.
The
So,
I guess
yes,
could
yes.
I mean it might even be less than century bonds. Could be like 50 years, like Shell.
50 years.
She even talked
Exa
about 5 or 10 year bonds as well. I think that would be more credible.
Yeah. So this is something that I think, like, if they do, let's say 10, 20 years, and they shove it down the throats of, let's say, France and Germany and Japan, it's something that is doable. It's not undoable, right? If the underlying is physical gold. That's why I think it's going to happen, because it's not just some guy off the street telling me this. It's Judy Shelton
Yeah, yeah,
telling me this. That's why I think it's believable, right?
yeah.
And like she said, to do all this, you got to revalue the gold first.
That's
And here we are. And it's funny how everything kind of like, the timing, right? Is it a coincidence? Judy Shelton came out of her book proposing this idea, and she always said, since I think last year that the U.S. government had to have to audit the gold. And then what happened in 2025? Elon Musk and Donald Trump all of a sudden said they want to audit the gold. And then boom, all of a sudden, the US imported 2,000 plus metric tons of gold. And by the
Yeah.
way, they can only track around 700 of that through the US trade data. The rest is untraceable, and Ron and Manny propose that that's because it's probably monetary gold. You don't need to report monetary gold imports to US trade data. See
In,
how all that kind of works out and like ties in?
yeah.
So, I mean, I'm just looking at evidence, right?
Yeah. And
That's it.
Eric, just one thing I wanted to add.
Yes.
There's been a lot of people recently complaining that nothing has been said anymore about the audit and when it's going to be. But
Sure.
the reason it could be so is because they're still importing a lot of gold because they need more than 2,000 to do the audit. So they
Exactly.
might take another 2, 3 months or so, and then
Yep.
they'll audit. And then I think the first gold bond will be issued next year, July 4th, 2026, which is the 250th anniversary of the Declaration of Independence.
July 4th is a holiday, Mario. They probably have to do on July 5th.
Yeah, that's why
Yeah.
that's right. But yeah, or July 3rd.
On July 1st. Yeah. Anyway, so I think, yeah, I agree with everything you just said. I think all this is going to happen. I mean, it's already happening.
Yeah.
That's my opinion. That's
So
my opinion. Yeah.
what are you doing like to profit from this? Because we like to talk about all this, but we're not like a charity or saints.
Yep.
And yeah, maybe if you don't mind telling the viewers what you've been doing
Sure.
and what do you plan to do?
Well, I mean, um, this is not investment advice. It's just what I'm doing for myself. I hold a lot of physical gold. A lot of people know that. I show it. I show my gold bars, like some of it. I hold quite a bit of physical silver, actually, even though it's cumbersome. It's, it's big in size because it's so cheap. It's only at around 30, what, $3 right now per troy ounce. So I hold a lot of that too. But I also hold a lot of miners. So I hold a lot of senior, mid-tier, and junior miners. Millions of dollars worth, actually. And I bought a lot of those at their lows in 2023, at the end of 2023, when they dumped to oblivion. So I bought a lot at that time. So a lot of them already went up quite a bit, but I think the best is yet to come for the miners because a lot of them moved, a lot of them haven't. A lot of them are still, you know, vanquishing at the bottom kind of thing. So I think if gold and silver, especially silver, if silver breaks $40, I think some of these miners, a lot of it actually, they're going to move up so quickly that it's going to rip people's faces off, for lack of a better word.
Yeah.
That's what I believe. That's what I believe. And I know you like a couple of names that I like, Mario. So,
Yeah. Yeah.
we talked about it, right? So,
That's right. That's
yeah,
right. And
yeah,
yeah, yeah, I think yeah, there's a lot of wealth to be made from this move. And the other thing, Eric, is that even the major mining companies, they're still undervalued if you think how much they're making on each ounce of gold. So it's not just the mid-tier and the juniors, I would say.
absolutely. I think they will all move
Yeah.
up.
Yeah.
So remember we talked about B2 gold a bit,
Yeah.
right?
Yeah.
After we talked, the thing went up 20%
Yeah.
in a week.
Yeah.
So these things is just unpredictable.
Yeah.
Nobody knows, and that's a senior right there, right? So and then even the royalty companies are moving up
Yeah.
in value.
You think it's going to be a little
Yeah,
bit like during the dot-com bubble at one point, where everything with gold or silver or mining anything you buy will will go up.
Sure. I mean, if this goes according to their plan, I'm just putting their like the U.S. government's hats on. What I would do if I were them, right now keep it a secret because they're accumulating. Let's say, or just deny, right? Officially deny everything that people throw in your way. So if people ask you, "Are you going to revalue?" No, no, no. Okay, every single time. 6 months later, 5 months later, whatever, you got enough. You start telling people that you're going to do it, either unofficially or indirectly unofficially. So what happens at that point? Gold is probably going to shoot up to. This is all hypothetical, speculation on my part. Okay,
Yeah.
so at that point, gold might shoot up to 5,000,
Yeah. Yeah.
5,000 US. That's how much is that if they do the US Treasury gold bond trick? That's approximately $1.3 trillion, if my calculations are correct. It's a lot of money.
Yeah.
1.3 trillion
Yeah.
dollars,
And I
right?
mean, foreigners own 8 trillion worth in treasury.
Yeah,
So if you've got 1 trillion of gold backing that, that's not a bad percentage or cover.
exactly. It might even overshoot, Mario. It might overshoot 6,000.
Um,
If it's a 6,000, what are we looking at? We're looking almost $2 trillion, right?
yeah.
Almost $2 trillion.
Yeah.
So
Yeah.
that's a
Two.
lot. That's
Yeah.
that's almost that's almost well, it's not almost 10%. It's almost 8%
Yeah.
of the US national debt, right?
But it's
Or eight,
also
six,
about
seven
it's
percent,
more
something like that.
than
Yeah.
40% of the debt owed to foreigners. In
Yeah. So
so that's really that would be enough to back to put the dollar on sound footing again.
very good point, Mario, because that may be what they're looking at. They're not even looking at the overall debt because who cares about the internal debt, right?
Yeah.
It's the external that they worry about.
Yeah. Yeah.
So if it's eight and they pump it up to let's say 2 trillion, like you said, right? That's a lot. That's what 20-30%
Yeah.
of the external debt.
Yeah.
They'll solve all the problems.
Yeah.
So they do that, and that what happens then? That's the bottom. That's the bottom gold price in U.S. dollars
Yeah.
because they'll defend that, and they don't even need to defend it because it will be pandemonium. It will be
Yeah.
crazy. Me and you will be the most popular people on YouTube. Okay, probably two boring guys, right? Like so, everybody will be in gold and silver at that point, and then after the revaluation, they'll probably take it up to 10,000. I'm
Yeah.
just like again, this is all wild speculation.
I'm happy with that.
Sure.
But
My point is it'll overshoot, right? It
yeah.
overshoots.
Yeah.
Something happens, and then it'll dump back to I don't know 6, 7,000. No, it always does, right? It always overshoot, and then it
Yeah, that's right.
reverse to me,
Yeah,
right?
and then loads
And
of
then
people are going to buy it at 10,000. Then in 15 years, 10 years time, they say, "Oh, it's really bad to buy gold," even though they could have bought it at like 2 or 3,000 right now.
exactly. So I think that's the playbook, really, which is right now nobody believes it, so
Yeah,
it's going to grind up,
yeah,
and then they release the information either officially or unofficially,
yeah,
then it's going to shoot up.
yeah,
And then people probably think, oh, if once they, how the common wisdom on use wisdom sparingly in quotation marks in Wall Street is buy the rumor, sell the news, right? So a lot of
yeah,
people are going to sell when the revaluation happens, but
yeah.
no, not with gold. Revaluation happens, the thing goes up
Buy,
continuously, right?
yeah,
Because
buy the
that's the
rumor,
bottom, right?
buy the rumor, buy.
Buy the news, buy the fact, right?
Yeah.
When it happens, and
So
then this thing, it's going to shoot up, and then, like you said, Mario, by the time they jump in, it's probably 9,000.
yeah,
They got 1,000, and then it
yeah.
just corrects at that
I
point.
guess one thing to say though is that even if none of this happened, I would still hold my gold because I still think they would still governments and central banks around the world are going to keep inflating. So yeah, we're like laughing here and talking about something that hasn't happened, and it might not happen, but I still think gold and silver are good monetary insurance.
Before I leave, Mario, I just
Yeah,
want to say that you made a very good point about the external debt of the US. So if we look at it from a external US debt point of view, I think 6,000 US dollars per troy ounce of physical gold that the US Treasury holds might actually solve a lot of their problems.
Yeah,
So
yeah.
that's actually, I mean, you're the first guy who reminded me of that. I think that will probably be a realistic target.
Eric, uh, I hope you have a great weekend in Hong Kong, and I'll talk to you later.
Thank you, Mario. You too.
Thank you.